Said that right as you pushed go.
Do you want to check your teeth in the camera? I
think I'm good though. I can see.
Hello. So Amber just realized right before we went live.
Right as we pushed the button.
She goes, "Oh my God, I forgot to check my teeth." So, do we have anything in that seat? Is there anything at all?
We had sushi.
Oh my God. Hello and welcome to the channel. I'm back here with my amazing good friend Amber Coleman from Guild Mortgage, and we are actually bringing you some up to the moment, immediate news about what's happening in the government and in the world when it comes to rates. So I'm going to let you kind of take it away. I know that we timed this to do a live for you guys. We're going to answer your questions. So if you're watching us live, please do me a favor, go down into the comments box, add your questions. We will definitely get to your Q&A towards the end, but we want to jump right into kind of what's happening because there's a news conference happening right now.
Yeah.
Right?
So the feds are speaking. So
the feds are, can we tell them? Because we say feds and I know. I'm going to feel dumb that I used to think you were talking about the actual feds. It's the FOMC, right?
I'm so impressed. Look at your nose. I was just waiting for him.
Anyway, it's basically the Federal Open Market Committee is what we're talking about. These are the people who help make decisions on how the money is being spent, correct?
Yeah.
Okay. Now let's go back on.
Yeah.
Okay. Oh.
So basically when the feds meet, when you hear, okay, there's a Fed meeting, I mean, in my world, I'm like, okay, let me lock everything right now. Because that usually means things are going to go a little crazy. The stock market reacts to what they say in a lot of ways. Okay. So when we met in January, I remember this when we talked about this, when we were doing our live in January.
Yes.
We talked about how the feds are low. So, I mean, the rates are low. So the reason why the rates are low is because our interest rates on our side, which is 30-year fixed rates, are based off of, a lot of times it follows the 10-year bond. Right. And what happens is the feds have been putting in an obscene amount of money into the mortgage-backed securities.
Right. I mean, so we're artificially feeding the...
so we're artificially keeping the rates low. Yeah. But they did that purposely to be able to stimulate the economy when COVID started. Right. Does that make sense?
No, it's really a balancing act, right? We know that COVID was going to have a massive effect across the world. It already has, not just just on a financial perspective, but also everywhere else. So knowing that, the government was trying to put in stopgaps and really help to feed that, lower rates, stimulate the economy artificially, essentially, by bringing and keeping those rates super, super low.
Yeah.
We talked about it in January. We talked about how
in January.
We need to be aware of what's going on.
And they did say that this was going to go further, but they told us to keep an eye on inflation. And they told us to keep an eye on when the employment numbers hit a certain level, right? So inflation far exceeded what they told us to watch out for.
Yeah, I mean, we all know that their inflation is...
Everything's costing more.
It's a lot. Yeah, we already know that everything is changing in that realm, for sure.
So that's far exceeded it. So we were kind of waiting on employment. And now that the additional $300 that people were getting to be off work is gone away, now we're seeing the employment numbers come into line too. So today, for the last month, everybody was anticipating that the feds would come on and say, we're going to start tapering.
Tapering what? Tapering the loan.
What they're putting into the bonds to be able to keep the rates low.
By tapering, when they pull that back, then the rates will start to creep up, which is what we talked about in our last live, right? We said the rates are definitely going to go up. And when we talk about the rates, we're talking about rates for mortgages, right? Mortgage rates, mortgage interest rates. This doesn't affect car loan rates. We'll talk about that in a minute. It doesn't affect credit card rates. This is just 30-year mortgage rates, essentially, right?
Yeah, that's what we're talking about right now. So, because there are two things that the feds are talking about. So we'll
address that in a minute. Right.
So basically what's happening is they came out today and said they're going to start tapering. So means that they're going to stop giving as much money to mortgage-backed securities, which will cause the rates to go up a little bit. Now, what rates went down to when COVID started was a crazy
historical lows that you're never going to see again.
A low amount. But so eventually they'd have to go back up, but they're not doing this all at once. So today oh my God. That was a good one right there.
That was a really good one.
I don't know why that just came out of my mouth. I wasn't even thinking that way. Today they started to do the tapering. So today they started tapering. It said 15 billion.
Which none of that means anything to me. If I can just be a layman's terms person right now, all of that's great.
It's an obscene amount of money that
those are numbers I would never even use.
And they're bringing it down by a percentage, but it's not all of it.
So what does this mean for anybody who wants to buy a house this year, next year? What does this mean for them?
Rates are still in a good place, but don't expect in the twos.
Okay. So if you heard your buddy down the street bought a house, or your buddy moved to Michigan and he was able to get 1.9 rate or 2.1, do not expect that you're going to get that rate. It doesn't mean you won't get low rates. And I think that's important to touch on. Low rates, you guys, anytime you get a mortgage interest rate that's below, I'd say what, 5%? Even 6%.
You're doing good.
You're in bonkers land.
And this is balancing the market too.
Yeah.
So before COVID happened, like, don't you remember 2019? The market was still crazy.
We already had low inventory, not as low as now, but
and
definitely
then the
low.
beginning of 2020, before COVID started, I was like, oh, how's this year going to look? Because it was already crazy. But on a good day at that point, if you could have gotten 3.875, maybe even 3.75 on a really good day, you thought you hit the jackpot, right? So we just got really spoiled with these rates. But what's happened, because there's a balancing in everything, right? You gain something, you lose something, you lose something, you gain something. Isn't that kind of how life works?
And that's how the real estate market works always.
We gained these low rates, but the prices have also gained, like went way high, and they continue to climb, right? So if there's a balancing act, I don't know that the prices will go down because there's still a lack of inventory, but at least we're going to calm.
Yeah, and we've already started to see that a little bit, in the last month. So from a real estate update perspective, I know we jumped right into the loan conversation, but wanted to because there's a news conference happening literally right now.
Yeah, like today was the important day. We were just sitting here waiting for the news to come through.
We want you to know up to the minute, like what you can expect. And mainly because we have a lot of people that have been kind of sitting on their hands waiting for a crash, or waiting for this announcement today, or waiting till next year. And our message has always been, please don't wait. Please don't wait. We know that it can be tough out there when it comes to finding a house to put an offer on. We know it can be tough because it's limited inventory. And we don't like the fact that a lot of our clients are having to pay over what the house is even worth or even appraised for in order to just secure a damn house. So for me, this is great news. I'm happy that they're going to be tapering off what they're stimulating the economy with. I'm happy to see that we're going to see our interest rates for mortgages, 30-year mortgages, go up a little. I'm not going to be happy if they go to the 7, 8, 9, 10 range, obviously, and I don't know that we'll ever get there again.
I don't think they'll go there because
that would do a reverse effect.
Right now, what they're doing, I mean, I don't know. I don't have a crystal ball, but I would think 0.25%, which isn't going to affect anybody with the price of the house, but it's going to, tape.
But it's good news,
it's going to be. It's good news because it's going to give us balance.
Yeah.
If you're looking for a house right now, there's no balance in the market right now because
low inventory, high prices. People are already feeling like Las Vegas is overpriced, which, come on, guys. Las Vegas isn't going to be overpriced for a really long time if you compare it to the places that most of our new residents are moving from. So, so really, we wanted to bring you this good news. But the big part of why we're doing this today is also, a lot of these meetings turn into a whirlwind of news outlets that decide to take clickbait and create fearful tactics in their headlines to get you guys to click and read when it's really going to say the same damn thing we just said, which is they even said in the meeting, nothing's going to happen. Nothing's really going to happen to the 30-year fixed rates or 30-year rates, right? They're going to maybe tick up a little, but it's not going to be some crazy.
Because they're doing this in
slowly
increments.
Stages, right?
They're doing it in increments. And to be honest, like what usually happens when something like this is happening, for the last month, the news has been anticipating this to happen. So the rates, we've seen them kind of go like this the last month. So like today when I'm looking at it, I'm like, the market's not really that bad because everybody was already anticipating it. Because the rates today are different than they were last month at this time.
Now where this will make a huge effect, some of the other changes that they're making will have a huge effect, is the Fed funds. The Fed fund rates, right? Is that what they're called? FUD rates?
Yeah, so that's kind of the clickbait thing that you guys might see. So you might see something on it that says Fed fund rates to remain near zero, right? So keep in mind that's something that's kind of a little bit tricky because these are two different subjects.
Yes.
The tapering is for the fixed loans, like your mortgage loans, 30-year fixed, 15-year fixed, 20-year fixed. That's for the fixed loans. The short-term loans are like home equity lines of credit. So the reason why
and car loans and credit card loans and things like that.
Yeah. And the reason why home equities are different, just in case you guys have never done a home equity before, is that is like kind of like a secondary mortgage that you can put on. I guess if you don't have a first, it can be a first too, but the rate adjusts with the market.
Yeah. So you never know from month to month what your payment's going to be with those. So that's where the biggest impact will be received, I think, right now, or felt right now versus what we're hearing and what we're reading now based on today is that yes, we're going to see some tapering up, but it's not some big jump, right? And even if it's even a taper up, we're nowhere near where we would have to be of concern, I would say, because that would have an opposite
we're
effect.
Still in better rates than they were in our economy before COVID happened.
Right.
But our inventory is still shorter than it was before COVID happened. Yeah. So we're still in a really good place right now, to be able to get a good mortgage. but once, I mean, because they're going to start this taper and it's going to be, you know, increments that they're going to start pulling back, which is going to start rates to go up and up and up. So
that
they
message
will
to
start
me is
moving up in the future.
Yeah. So that message is like, we're never going to sit here and say, you need to buy a house today, right now, because we want that money. We want to make the sale. We always want to do what's right for you.
Mhm.
And the reality is we come with these urgent messages. We're coming with these live updates. We're constantly trying to make sure that you know what's going on in the market as often as we can, because we want you to be able to make the decision that's right for you in that moment. We said in our last month's update, we talked about how a smart time to buy, if you're frustrated with the current market situation, if you've been wanting to move to Vegas, or if you currently live here and you're trying to put an offer on a house and you've written 30 offers and none of them are accepted and you can't come out of pocket as much as maybe some of the other buyers, is that during a softer season, during the holiday season, a down season is typically a good time for you to do that shopping. We will see less listings because nobody wants to show their house on Christmas or around Thanksgiving.
Mm-hmm.
However, you'll have a little bit more leeway when it comes to making offers. So same sort of concept here. We still believe shopping sooner rather than later is the smartest thing you can do. And now with this information and it being solidly confirmed, it's only been anticipated up to this point, but we now got a solid confirmation. Yep, they're tapering. They're going to start tapering what they're stimulating the economy with. And now that's going to affect those long mortgage rates. With that being said, now more than ever, we're going to urge you to not only shop in a soft market, but get your ass ready to start shopping, period, because we don't want you to be regretful in a year and saying, man, I could have had a full point less on my loan or whatever that looks like in a year, as you might be. So we're really just trying to keep you ahead of the game so that, you know, Vegas is still great. It's still shoppable. It's still affordable. It's still an absolutely awesome place for you to be putting your money into, especially because of the amount of frenzy around the city. The frenzy means people want to be here, means the frenzy is continuing to stimulate the economy here, which means the rates are going up, which means even if you bought a house 2 months from now, it's still going to be expanding in terms of your equity as you live in it. So, and at a faster rate than it normally would have, just because things have been so frenzied. So we're just trying to help you put more money in your pocket at the end of the day.
Exactly.
I don't know.
I don't really know if there's any town in America that hasn't seen this.
No, yeah, I mean,
so
this is
comparable. We're still doing good comparable to where other towns, and I'm like, the real estate is what?
Yeah.
There's a place without jobs, so I think comparable. We're still in a really good place.
You said that so snooty. You got such a snooty Las
Did
Vegas.
I?
The real estate is what? Oh my God! And what are you selling these houses for? You should come to Las Vegas.
Sometimes my sassiness.
No, I love it. No, it just shows that we have pride in. You haven't clearly been to Las Vegas, which I love.
I mean, Vegas is an amazing place.
It is. So
no place like it.
We do want to answer your questions. I see a few here that have been dropped into the comments box. Wanted to remind anybody that's joined, please, if you have any questions at all about living in Vegas, moving to Vegas, the fact that you might already live here, buying a house, loans, nothing, my hair, her awesome lipstick, whatever you want to ask us, we'll answer.
Please ask about
the lipstick. Please ask. I mean, yeah, whatever. Anyway,
just kidding.
But it's a quick update for you guys today, and really it was because we saw this coming. We anticipated it for you last month, and we just felt, God, we got to get in front of these people while it's happening right now, so that you know if you're in.
The headlines are going to come out.
And here's the other thing: if you're already working with our team, or you're working with another loan officer, and you're currently in escrow, make a phone call today to that loan officer to make sure that you're locked in on the best rate that you can get. Make that phone call now. In fact, I love you, but end this and go make a phone call right now, because you're going to start seeing changes, and you're going to start seeing yesterday's rate being a little bit less possibly than what you might get tomorrow. So making those phone calls now is probably a good idea.
Yeah, because typically when these things happen, you know, the market's going to sell somewhere, but there's usually a knee-jerk reaction. So
because of
everybody
those
kind of goes into
market.
Everybody goes, because like tomorrow morning we might see a bit of a frenzy somewhere, and you watch the knee-jerk and then it calms.
Yeah.
Right. And you see that kind of in everything. You see the knee-jerk.
Yeah.
Everybody follows, and then it calms.
Now, if you're working with an amazing team like Amber's team, you will not have to call your loan officer, because they will have been running around like chickens with their heads cut off an hour prior to this live broadcast, or 2 days prior. Lock them. I mean, she made probably 5. That's why she didn't have time to check her teeth, because she was making phone calls saying, make sure you lock that loan. So, you know, make sure that you're working with the right team when you are thinking about buying a house, but that's what their job is. Their job is to be looking out for your best interest, as it is ours. And that's what they do. Right. So what else we got on this?
Well, thank you.
I don't know. I feel good about it. I feel excited that we were able to come right when this announcement has been happening.
Yeah, like we were literally sitting
hit.
here, and here comes the headlines. So we were just reading them right as they came through.
Yeah.
So I mean, I think balance is good.
Mm-hmm.
You know, like to be in this world that we've been in, it's been fun.
Yeah.
You know, it's been fun, but there hasn't been a lot of balance, and you feel
it has not been fun.
You
I don't
feel
know
really
who you're talking
bad for
to.
the. I mean, looking back, right?
Yeah.
You could say you learned a lot.
Well,
You
and
lived
the
a lot.
energy and the sure.
I liked it. I thought you would like that one, but yeah, and the energy. You know, when you're able to win,
right?
When you're able to win something like that, but being in a world that doesn't have any balance is never one that can continue.
And especially with real estate, you know, I do this a lot. I post a lot on my channel. I post a lot on my Instagram and Facebook about, you know, move here, please move here, because I still do very much believe that the city still has quite a bit of growth before we're at max capacity and it turns into something that's not desirable. We have a lot of growth to go. And I have people that'll comment constantly, tell them to stay in California. I don't want anybody coming. You know, we're already overrun. And that's because they know that they got here and it's so amazing. They don't want it to change.
They don't want any more.
They're being greedy.
Now that they moved here, they want you to stop.
And listen, I get that. I can be that way too. But I, more than anything, want the world to know, even if you already live here and don't own a home, I want the world to know rent is not going down anytime soon. Vegas is an amazing place to live. We are a legitimized city. We've got professional sports. We've got tech startups happening. We've got a huge emerging startup scene here in general. We've obviously got all the entertainment that you could ask for and the best food in the world. So there's nothing else that would tell me to turn that around and say, please go home and don't come to Vegas. Except that, you know, waiting too long to buy a house, you know, waiting too long to jump on this opportunity, I would say.
Yeah.
God, I sound so salesy. I hate sounding salesy. Have you checked
the rents lately though?
I checked the
rent me on a brand new apartment. And I was like, they're charging what?
Yeah.
Where's the golf course it should be on?
There are, so I'll tell you, 2 years ago, my daughter was renting for the first time. And I think she was paying $1,200 or $1,300 a month for like a 2-bedroom little apartment. Fast forward to 2 years later, they're going for almost $2,000 a month.
That same apartment?
18, 19, $2,000 a month, depending on whatever. So it's just massive. And I just saw an article recently.
Well, you can buy a house for that.
That's my point, is the people who don't think about buying, who only think they can only rent, I'm going to tell you right now, that's wrong. You're wrong. I guarantee you probably are eligible to buy. It's so much smarter for you to be buying and earning money while you're paying that mortgage, so that if you do just, you know, leave in a year, whatever, you might have some money in the kitty that you can pull out and move forward with, rather than paying somebody else's rent. So it's a lot. It's really a lot. I watched a show, and then I read an article the other day about how Airbnb, because there's such a lack of inventory for rentals and such a lack of inventory.
Oh, because I've heard a lot of people are going to those now.
They're up almost 3,000% in some places. Like there's one guy that had someone paying him $1,300 a night.
Are you serious?
For a 4-bedroom full house. Now, it might be because they were used to paying $4,000 a month in somewhere else in the United States, and to them for 2 or 3 weeks that was fine. But that's obscene. That's obscene. So
own some of
I mean, if you're thinking about buying or investing in Airbnb, please let our team know. We would happily help you invest in Airbnb, right? So let's answer some questions. This was meant to be a quick, short update. We're not going to stay on too long today, but just stay tuned for more updates from my channel. And we're going to go active again on Amber's channel here soon with some videos, and try to do this on both channels. We want to make sure you guys are getting as much information as possible, not just about real estate, but about living in Vegas, moving to Vegas. If you already live here, stuff you can do. And we just want you to, we want to be your one-stop shop, I guess is my point.
We'd love to be your one-stop shop.
We just need one more to be able to be Charlie's Angels. We need a Charlie, and then we need like a brunette in between us.
Well, you have a lot of brunettes on your team. So
I'll figure that out.
We can definitely work that out. Okay. I got one down right in the office.
We'll make a phone call
for us right now.
All right, let's look at our comments here. Thanks for sitting through. I know this was a kind of a quick, jumpy run to. If you just joined us, rewind to the beginning. We're talking about the updates with the rates and what's happening. The announcement was happening as we were going live, so definitely some good information for you. I hope you can follow all the jargon. Pollux World of Entertainment says hello from Pittsburgh, Lacey and Amber. Pollux was the winner, believe it or not.
Did Pollux win?
Of the Chiefs game.
Oh, yay.
So he's going to be coming out to Vegas to hang out with me and Jacob's Life in Vegas at the Chiefs game in 2 weeks, my friend.
Congratulations.
Very excited. Marina says, so is this a good time to look into buying a home here in Vegas? Marina, only if you click on the link in the description below and contact me and Amber is the no, of course it is. We would love to work with you though. It is a good time to buy, and especially because we're entering the holiday season, you might not have as many options, but it's a good time to start your buying process. Whether you find your house or not during that time frame, it'll ease you into it versus you having to make 70 offers at once and go over and above list on all of them. We are seeing our team see huge success with not only receiving approvals from people from our offers from sellers, but also at list price and sometimes a little below, but mostly at list price. So things are calming down.
It's a good change.
It's a good change.
Yeah.
Yes.